Who's winning in the May market, buyers or sellers? Let's dig right in. Hey everybody, it's Alyson with Live South Denver, your real estate strategist and realtor for the South Denver area. The Denver market saw 4,200 homes go under contract in April. That was 100 more than the month before, putting us up by 2%, and 100 fewer than this time last year, bringing us down by 2%. 3,600 people closed on new homes in April, 200 more than the previous month, up 6%, but we were exactly where we were this time last year. Now, the new listings is where things really change. We had 5,800 new listings last month. That is 1,000 more than the month before, 1,200 more than this time last year. So month over month, we're up 17%, and year over year, we're up 26% for new listings. We did not sell all those homes. We closed out April with 7,200 available homes for sale, which is 1,500 more homes for sale than we had the previous month. Our months of inventory continues to tick up slightly. We were at 1.68 in February, 1.71 in March, and we're at 1.97 in April. You might think with all those unsold homes that average days on market and median days on market were higher, right? Or maybe they had increased. Nope, they decreased kind of on cue. They usually drop drastically as we get into late spring, and they did. We dropped from 39 average days on market to 30, and we went from 12 median days to 8. Let's get on to those home prices that we are all so curious about. All right, last month, the average close price for all homes was $721,000. That increased $24,000 from the month before. It's up 3% from the previous month and up 8% from the previous year. The single family home price average hit $811,000. That is up $37,000 from the previous month. That is up 5% month over month and 7% year over year. The average condo and townhome price comes in at $468,000. This is actually down $7,000 month over month. That puts us down 1.5% from the previous month, but still up year over year by about 1%. All right, over to those median home prices. The median price of all homes sold, whether attached or detached, is $601,000. That is up $10,000 from the month before. That gives us a month over month increase of about 2% and a year over year increase of roughly 4.5%. $660,000 is the median price for single family homes. That is up $16,000 from the month before. That puts us up about 2.5% month over month and about 4% year over year. The median price for condos and townhomes is also down. It's at $415,000, a $3,000 decrease month over month. That decrease puts us down less than 1% month over month, but where it puts us compared to last year is up about 2.5%. And last, the list price to sales price ratio is up just 0.3% from 98.3 to 98.6. All right, let's dive into takeaways. What does all this data mean? Let's jump back to that question from the intro. Who is in charge in this market? Is it the buyers? Is it the sellers? Well, it's a little bit of both. First, let's take that data about the list price to sales price ratio. It's barely budged in a month. That tells us that we do not have a hot market. We do not have buyers who feel like they need to come in, rush, feel pushed. They don't have to offer a lot over list price. They just don't feel a lot of urgency. We see this in some of our other data points too. I mean, we saw 1,200 more listings come to market with 100 fewer homes go under contract versus last year. Then we saw 1,500 more homes come to market this month versus last month, with 100 more homes go under contract this month versus last month. So that ratio, right? 1,500 more homes come to market, but only 100 more homes go under contract. So we were not in a market that is aggressive enough to eat up the available inventory. So we just do not see buyers feel urgency. We do not see buyers going, oh, I'm okay going out and pushing to buy a home when rates are 7%, knowing that I'll just refi later. There's not any fire in the belly. So that means that the sellers are not in control, the buyers are, but the buyers don't feel drive. They're kind of in the back seat, just waiting, just wishy-washy. All of these stats point to why inventory is increasing in this market, why sellers feel like this market is a little slower than they were anticipating for this time of year, and why in this scenario, buyers are more in charge. They may be wishy-washy, they may be sitting in the back seat, but they are still driving much of the market and the pace of things. For a good portion of the market, the buyer is driving the pace of offers. They are driving the terms. They are controlling much of what is getting offered on a home. I mean, yes, there's a bottom line at which point a seller won't sell a house, but they are in control. They can ask for concessions. They can ask for closing costs. They are certainly getting an inspection and not putting any inspection waivers on a property. But let me flip the tables and give you this segment of the sellers that are in control. Let's go back to that days on market data. We see that we have median days on market at 8. The median talks about half above, half below. So we're looking at half of the homes are selling in 8 days or less, right? And half the homes are selling 8 days or more. So I went and verified that data. I said, okay, I'm gonna pull the data. It looks at 0 to 7 days, new listings that come on the market. I can look at everything. How many stayed active and how many went under contract. And it was across Jefferson County, Douglas County, and Arapahoe County, somewhere between 49 and 53% went under contract in the first week. So that data holds pretty true. So we do have sellers who are putting themselves in positions of power and control because they're presenting homes that are staged, that have been updated, kept up. They have new mechanicals, a new roof. Whatever it is driving the buyers to want these homes. When you have buyers who are racing in to get a house in the first week, there are often competitive offers. They are certainly not striking a deal. They are not complaining about price. The seller is dictating the terms. The seller may be getting a rent back. It is all seller control in that situation. The other thing I can tell you, as I sit and look through the houses that go under contract in the first week, they're all beautiful. They're all beautiful. They do not have ugly paint. The yards are not bad. They do not have horrible furniture that is outdated, scratched up from cats, mismatched. Whether they let their agent bring in staging furniture or they just had good taste, not everyone has the money to have amazing taste in every room, so staging can be an option. But these houses were well kept. They were not all brand new, but they were well maintained. This is important to know because sellers, this is what buyers want. It doesn't have to be perfect. They may come in and change things, but if it's well kept, isn't going to be a money pit when they move in. They don't have to drop another $15,000 to paint the whole house before they can drop their stuff in. Don't have to rip out ratty carpet. That is the easy button for buyers. That's perfect. This duality in the market, the slower side, has generally been blamed on rates being in the 7s. In April, we had the second slowest rate of new home applications, new mortgage applications, I should say, since October of last year when rates were in the 8s. So we certainly know there's a correlation between where the mortgage rates are and what's happening in the market. We have seen them start to trickle down. We had hit a high of around 7.5%. They would, upon recording, I don't know where they'll be by the time you see this in a few more days, but they were down around 7%. So we are seeing some movement downward. And just with that little bit of budging, we're seeing the market show some more activity. It doesn't take much. So that we know when rates get down into the mid 6s, certainly we get in the low 6s, we are going to see bustling activity. The start of this year, January and February, was like what I normally see for myself, and my colleagues said the same thing, what they normally see in March, April, early May in terms of explosive activity. Because early this year, early 2024, we had rates in the low 6s. I had cash buyers who were losing in multiple offers, all because it was such a nice time rate-wise and we didn't know where rates were going to go. Now, did you catch that the single family home price average was over $800,000? In fact, it was $811,000. And all that is in the face of this environment where rates are in the 7s. And we have buyers pulling back and feeling a little sluggish and not so invested in diving in quickly. Can you imagine what it would be if rates were softer and where it will be if rates stay level or pull back at all between now and the end of summer? The Denver market typically sees its highest prices, home prices at their peak in June, occasionally in May, like 1 or 2 times in the last 10 years we've seen that, sometimes in July, but almost always June gives us our highest home price, which means those homes were usually bought and sold in May. So seeing home prices over $800,000 in April, which is a 5% increase month over month, tells us the sellers are still in control, have command of the market. We have inventory below 2 months of inventory. Even though it's rising, it is well below what we consider a balanced market. Buyers, I'll still put a little hope back in your pocket where you do have control. If you see homes lingering, those ones that didn't sell in the first week, those sellers aren't losing hope after week 1, but they start to get antsy after about the 2.5-week mark, the 3-week mark. They start to talk about how quickly they should make a price reduction. They don't know how drastic the price reduction should be, and every agent has a different mindset about how big price reductions should be. Some agents think you should do a small one just to bump yourself up to the top, right? Just get some more attention. Just make yourself get noticed again. Others say, let's do a big price reduction. Let's get things going. Let's get some strong traction. Let's get you an offer and get off the market. So you don't know where the agent is versus the seller. The seller might be willing to make a large price reduction, but the agent talks them out of it. Or the agent may be wanting a large price reduction, know the true value of the house because they're seeing some market data, but the seller won't let them. So just go in and make an offer. Just put it on paper, get it in front of the seller. You never know what you might get. This market is a nuanced one with not enough inventory in hot school districts, and we've got homes languishing on the market in otherwise good neighborhoods where buyers, you could get a deal. So there is a lot of different pockets that need special attention right now. If you are curious about the market and want to know how it fits into your plans for selling and buying, please reach out. You know, I always love to connect. And I will see y'all next week.